Have mortgage rates finally found some stability? Well, after starting the week just under 6.7%, we're opening this morning at 6.60. Now, yes, we're still well above the lows we experienced earlier this year, but rates remain in this narrow range we've experienced for a majority of 2026. Now, just this time last week, the markets were in a panic with a surprisingly stronger than expected jobs report showing 172,000 new jobs created versus the 85,000 that was expected. Markets were terrified that we were going to see rates run away from here. Instead, rates recovered as we head into market open this morning. The big question becomes why? Well, this week we saw a barrage of data and a barrage of headlines. We'll start with the data. We saw inflation. CPI, Consumer Price Index, came in below expectations. And it reignited the concern that, or put to bed the rest of concerns that inflation, where yes, it's still above target, it's not reaccelerating, which was a massive win for Wall Street and ultimately rates. On top of that, we saw initial jobless claims come in weaker than expected, which at below the surface pointed to signs that the labor market may not be as strong as perceived. Then the big one, the headlines, geopolitical tensions, peace talks with Iran. Looks like we have actually advanced to the next stage where we could see a complete end to the war, which in turn, we saw oil prices deteriorate. Now, this came late in the day yesterday, Thursday, and from the announcement of that news wire, we saw oil prices deteriorate, mortgage bonds improve, treasuries deteriorate, which all pointed to mortgage interest rates improving. Now, yes, as I said at the open, we're nowhere near where we were back in late February, but we're making positive strides forward. So here's why all of this matters. Rates began the week at 6.6 at 8, 6.7. We're opening Friday at 6.60. Now, yes, still above where we want them to be, but it's well below that 7% mark that people feared based on the data that was released last week. The market right now is stuck in between a resilient economy and inflation improving at not a grandiose level that we were hoping for. For home buyers, this means today's market is still about affordability and strength, not trying to predict the timing around rates. For realtors and loan officers, the conversation remains the same. We need to focus on what clients can afford today and what they're comfortable with, and preparing them for, hey, at some later point, rates are going to come back down and you're going to refinance into the mortgage that is more fitting to your budget. The biggest question now is whether inflation continues cooling enough for the Fed to eventually cut rates later this year. That's what the markets are watching now. As always, if you find value in this content, please like, subscribe, comment, forward it to whoever you see fit. As always, we're here. If there's any questions, don't hesitate to reach out. Let's make it a fantastic Friday.